countdown timer. And so they have 10 minutes fully to do it with their Q&A. And she said her last word with 1 second to go. So well done. Next to the stage is Nicole Haverly. Nicole is a senior portfolio manager of Affinity Plus Federal Credit Union in St. Paul, Minnesota. Nicole will present her Savings Accelerator project. Her project is about increasing saving behavior through using an enhanced loan product and putting an end to the downward spiral of payday lending. Nicole Haverly.
Thank you, Tim. Good afternoon. I want to say thank you to CUES and Currency and DDJ Myers for allowing me the platform to be here, and to Affinity Plus for letting me share our story. The Savings Accelerator program is a multi-dimensional product, and I'm going to show a little bit of my past inspiration and then show some statistics and evidence of the program, and then also the future, looking forward to the future. And so in 2009, I set out to take my husband to Napa Valley, and I couldn't save for a dime, and I wanted to take him in 2011. And unfortunately, we went last month. And why I'm sharing this personal anecdote is that if I would have had a program like the Savings Accelerator, I probably would have been there a long time ago, maybe even 2 or 3 more times. I'm currently motivated right now by a book called The Art of Opportunity, and it talks about the difference between traditional strategy and then strategic innovation. And I think that's important when we're creating products and services for our members to be innovative. I was fortunate enough to team up with Filene, the think tank institute, and we asked Americans across the United States, are you satisfied with the amount of money that you are saving each month? And overwhelmingly, they said that they weren't. And when we dove down even deeper, we saw that it was even worse for millennials. And so we asked them, again, all Americans, what percentage do you put your income to your savings? And over half said 0 to 10, and some were even incurring debt, which is pretty sad. And when we asked the same thing for millennials, it was the same. So we took this millennial group and we said, if your bank or credit union offered a product like the Savings Accelerator program, would you enroll in it? And there was the overwhelming 53% that said they would. We also took a survey of credit union executives and employees, and we asked them 2 questions. One, how secure do you think your members are with their savings? And a lot of people said that they were either somewhat or very insecure. And second, we asked, do you think that the lack of savings correlates to delinquencies and charge-offs? And they somewhat and completely agreed here. So there's evidence out there. Like I said, the Savings Accelerator program is a program of interlocking gears. You come in and either you purchase your auto or you refinance your auto loan, and you get a savings account called the Savings Accelerator that's attached, and you do monthly payments into your savings account. So I'm going to go over the 3 different gears here. The first one is that increased rate on savings. So these members are putting away a certain amount every month to their savings account, and it's accruing a 1% rate up to $2,000. 57% of Americans today don't know the savings rates on their own savings. And then actually millennials, they've never even seen the concept of compounded interest with today's rates. Second, you get a reduction in your rate on your auto loan depending on your credit score. And everyone out there is looking for the next best deal or here or there to save. And there's no layered gimmicks or any restrictions with the account. And third, the best thing is that these members then, after their loan is paid off, they have an accumulation of savings, either for the unexpected expenses or that sink fund. But on average, the members save about $1,000 or more, which is huge and is a very good foundation layering. I won't go over these statistics in depth, but this is the first 100 borrowers in the program. And overall, we've seen very healthy attributes for all the members that have enrolled in the program. We had a few goals in place when we launched the program, and I'm going to share 2 of them here. One is that we really wanted to attract the millennials. We think that we have a huge opportunity here. And you'll see from this chart that over 60% were under the age of 30. And second, we wanted to attract new borrowers into Affinity Plus to show them products like this. And so of the first 120 of them were new members in 2016. We said, welcome to Affinity Plus. We have amazing products and services, but we also have this new program for you as well. I won't go through all these stats, but I did want to share month over month our statistics of our loans originated and savings. And as of Friday, we were able to originate 165 loans for $2.3 million in fundings. We've saved our members over $16,000 in interest. And actually, we hit the milestone. They've saved cumulatively over $50,000 as of Friday. I wanted to share the employee, the member, and then the organizational impact. And so I did bring a few people with me. I did bring Corrine Lowe. I talked about her in a recent video that I did as well. She's an employee out of our Roseville branch. She's done over 30% of the originations, and so I sat down with Corrine and I said, how do you do it? I said, what cues do you look for when you're talking with your members? And she said, Nicole, you don't get it. I don't look for cues. I talk to every single member because they either can save or they can save more. And I knew that the success of the program lies in employees like this. I also got to talk to one of our members, Sierra. She's a millennial. She enrolled in the program right away. And I got to talk to her. I said, how has this impacted your savings in the future? She said, Nicole, I was able to save for things, but I had to have a goal in place, and this is forcing me to save. So I took it one step deeper, and I said, Sierra, what are you saving for now? She's an aspiring singer. She just launched her first EP, and she's saving for a new microphone for her studio. And so she has that now on her savings, and she's saving every month. At Affinity Plus, our core values are caring, excellence, and integrity, and we need to build programs and products for our members that are around our core values. And I would be remiss if I didn't consider the financial soundness of the program. Some of you are probably thinking you're paying your members an increased interest rate and decreasing the interest rate on their loans. So what is the break-even point for the credit union? But remember that there's going to be the reduced probability of default with this extra savings account tied, and also that it's the added protection to the credit union as well. So looking ahead, last month, the CFPB launched their final study, and it showed that members are twice as likely to save if there's an incentive tied to their savings account. And so there's proof out in the industry that our members need this as well. I think it's important when we're developing products like this to get exposure out through marketing and advertising to our members to show the credit union difference. We have amazing products and services out there. And then at Affinity Plus, we've created a few different resources for our members and our employees. One is our Savings Accelerator Calculator, but I think it's important to put resources in the hands of our employees and our members to show them this difference. The life of an auto loan lately is not that long, so we have to get ahead of that payoff and ask these members, what's that next step? What are you going to save for? What is that next goal? And let's put them on a really good path to succeed. And then also, I'm going to be very, very clear here. I know that the Savings Accelerator program is not the seismic, huge event and program that's going to change the world. But I do know that when we have programs like this that are scalable and they're relevant, and that all credit unions can borrow and use each other's data to grow and make good products, we'll make our employees and then our members' lives a lot healthier with all their increased savings. So with that, I want to say thank you. It's been an honor.
All right. It's question time with Nicole. Let's start with Dee Dee.
Thank you, Nicole. I want to dive into those statistics a little bit more. But Corinne, you said she had an attitude. Members can save or can save more, right?
Yeah.
How can you replicate that attitude in a credit union?
Yeah, I've been fortunate enough to sit down in that interview and ask Corrine not only to give me some ideas of how to make this stronger, but we've actually thought about bringing her into some of our branches and our contact centers to share her passion. She's so passionate about it, but to really dive in to show all the different ways that we're impacting their members. And she doesn't just look at their savings, she looks at their entire financial situation. So I think using Corrine when we're looking at products beyond even the Savings Accelerator program to really get the member and the employee buy-in is going to be key.
Let's go to Matt.
Nicole, you talked a little bit about next steps, and how can the savings habit be continued after the loan is paid off for those members?
Yeah, I think that the first step is changing their behavior, right? We need to learn to save, and some of us may have not learned that early on, and that's maybe why we've struggled. But once you see that they understand that savings every month and making it more of like a bill payment versus I paid all my bills and now I have money to save is going to be huge. But then thinking about their goals and their dreams for the future. So it's not fun to really save for your emergency fund, at least not for me, but it was when I wanted to buy a car or buy a house. And so putting something tangible to those dreams then makes it more inviting for them to continue that savings habit.
And finally, Ashley.
Nicole, congratulations on being
you.
here. Very exciting for you. A question, as you're thinking about millennials as one of your target audiences for this type of product, how do you all plan to market to them to learn about it and to gain more market share of millennials?
Yeah. It's a great question. When we were looking at the millennials, we wanted to see what can we offer them that they may not have right now. And remember that there's a loan tied to this program as well. And a good majority of actually the first 100 didn't have a credit score when they came into the program. And not only are they establishing credit or maybe repairing their credit, but now they have this savings option as well. So we picture it as a dual promotion almost of the loan and then also the savings to then help them save so they maybe don't need as much lending in the future because we have that emergency fund or that savings, but to help them for their future events as well.